I fully expect it to be reach 250,000. And I didn't realize it was because the dollar was going to crash.
Thank you for halving me.
Ah.
It's just insane to me, like the fact that, you know, they teach everybody in school from a young age, you'll put your hand over your heart and say a pledge allegiance. Like, that's brainwashing from a super young age.
Let me tell you something. This is a keyboard, a wireless keyboard I have in front of my screen.
Yeah,
it's a QWERTY keyboard layout, right?
I was wondering
QWERTY,
why you had a
QWERTY keyboard layout
like that.
Okay,
is that for like people who can't see stuff? Is that the Reader's Digest edition or something? I thought that was your calculator.
My calculator's over here. Okay.
We got to know each other back in the days when all the people who liked Bitcoin could fit into one room.
Bitcoin is probably the best investment I've seen in my career.
Oh wait, are we here? We have?
Yeah, we have halved. Woo! It is that time, party people. Guess what I've got? I got a little list right here for you. If I had music, I would, do anything, but I'm old school.
Bitcoin.
It's the Bitcoin halving. It's the Bitcoin halving. It's the Bitcoin halving. Miners get a pay cut today.
Question, your video, according to my page, just says it's been removed for violating YouTube's community guidelines. Are we still live?
No way.
Censorship.
Stop it.
Yeah, your video has been deleted.
My first question is about your local communities. Definitely, we're all living now in a very strange situation. Everybody's locked down. Those who didn't know how to use Zoom are now very professional in that. Maybe not the case of the crypto community, but of all other people who are not so acquainted with the crypto and blockchain. My first question is, how did the situation impact the sentiment around the economy in your countries, and how the situation has impacted the community of crypto in your countries? Is it growing because of the situation, or did it stay the same? I propose that we start from the country of the rising sun. So with Japan, that already has Monday, the day of halving, almost ending. Hisashi, hi Hisashi, what's the time in Japan now?
Hi everyone, it is just past 11 p.m. in Japan, almost midnight. My name is Hisashi and I'm managing editor at Cointelegraph Japan. And yes, coronavirus thing has impacted Japanese economy very significantly, as of course, as many other countries, right? But I think the difference from many other countries is that, of course, we are kind of in a lockdown situation, but our government cannot really force people not to go outside, and I mean they cannot really, fine people. They cannot really, arrest people. So it's like really voluntary measurement, and Japanese people are being requested not to go outside and to stay home. But for some reasons, Japanese are very, very are known for their conformity to the rule and the government and the request from the top. So things. I know they stay home anyway. So, but they stay home anyway not because they are getting fined or arrested, but they just think they want to show that they're good citizens, I think.
What about China, Vadim?
One of the good things that we're going to have offline events soon. In the end of the May, we already start to do some blockchain and crypto kind of parties and blockchain events. So I think everything is getting better. And also, regarding to the news and the community, I cannot say that it's growing right now, because when the coronavirus started, it was Chinese New Year in January and February. So majority of the people, they've been staying at home, and during the coronavirus, they've been stuck at home. That's why I think the community is still like the same, but just after that, in March and April, when everyone just go out, it's getting much better, and the community is very, very active right now. Everyone discussing halving, everyone discussing other like good projects that come in this year. Everyone planning a lot of like activities, offline, online activities, etc. So also, I think that Chinese government is helping a lot to spread the news and information about cryptocurrencies itself, because we are expecting Chinese yuan. I mean, digital Chinese yuan is coming, and it's well known as DCEP. And we're already seeing the screenshots made by the test period from the Agriculture Bank of China. So it's already in test, and it's happening. It's going to be used soon, and yeah. So we have a lot of things coming, and happy everyone to be together with us, and finally to stop all this kind of coronavirus madness.
Great, thank you, Vadim. Well, we are already almost 2,000 on YouTube. Thank you so much for joining our Bitcoin halving party. And please feel free to ask your questions about the halving, about the crypto situation in the countries that we cover for you from Cointelegraph. So we are going from Asia to Europe. Italy. We are so close to each other, but I'm also in Italy,
Looks
but
so
in the
far
north,
right now.
and we can't go to each other even being in the same country. So
we, as a team at Cointelegraph Italy, will fight our team battle against all of these scammers and try to have everyone informed on Bitcoin and great projects that deserve the attention of our Italian people.
Bitcoin halving in German is Bitcoin Halbierung. Was ist das?
Can you hear me now?
Yes, we hear you very well in English.
People, for example, now want to invest in crypto or general do investment or buy crypto. And I think, for example, crypto exchanges and custodies can suffer from it, of course. Last Soros show, for example, was only 3% of German now regarding crypto as investments. But at the same time, I hear from the community and for my friends, my relatives, what Bitcoin can be, cryptocurrency could serve as kind of safe haven in such uncertain times. And I really think it's a big step for German people, because we like safety investment, and I don't know, we like keep our money in traditional banks. And when a couple of friends say me, okay, Bitcoin's not so bad, maybe I can invest sometimes, I think it's very, very good. And coronavirus has in this sense a positive impact on it.
Bitcoin is definitely not so bad. It's actually great. Fantastic. Thank you.
It's great, but not for normal German people who like traditional investment and traditional payment system. I can wait, I don't know, 2 days for my bank transfer, for example. It's very, very long.
Well, they will understand that new normality is and blockchain. Thank you so much, Veronica. Okay, I also would like to repeat that please ask your questions to the chat in YouTube and other social media where we broadcast our Bitcoin halving party. After we present the South American situation, we will go to your questions. Okay, so we are going to South America. Agustin, what's the situation in Argentina? Are people investing in crypto more? How are you doing?
Hi guys, hi everyone. I'm the manager director of Cointelegraph in Spanish, so that covers Spain and also Latin America. I am based in Buenos Aires, And the situation here is started to cool down. Right now, we are entering in the last phase of quarantine. So the people start slowly going out the streets. The commerce, some stores are opening again. But as you know, the economy has been hit very, very bad. One of the reasons is that most of our Argentinian economy is informal. So people are not banking. They are not. They don't have bank accounts. They use cash. So this informality left a lot of people on the streets as soon as the quarantine began. So we are seeing that a lot of people are searching for information about Bitcoin. As you may know, as our audience may know, we have a section at Cointelegraph called Explained, where we explain our community how to buy Bitcoin, how to sell Bitcoin, how this technology works. And we never had as much traffic in these kind of articles on how to do transactions with Bitcoin as during the quarantine period. So this is a good signal of how this quarantine accelerated the adoption of this kind of technology, Bitcoin, but also blockchain and how it works, how these payments works. And we also have seen that in countries like Venezuela and Mexico, also we have a huge increase of P2P transactions. So they are reaching maximum levels, historical levels. So this is I think this is very positive for the crypto community. And this is just the beginning. I think this accelerated the adoption, and we are showing the world that this new technology is here to stay. As well as a new recent survey published by Bitflyer Europe indicates that 68% of the Spanish people in Spain are confident that crypto will continue to exist within the next 10 years. So this is here to stay, and the quarantine just accelerated. So yes, I think that quarantine was very good for crypto, but now the economy has to go back to the same levels. It will be hard. It will take time to recover. Some industries are better. Some industries are very, very bad. But I think that this also will generate opportunities.
Cool, thank you, Agustin. Okay, our last but not least regional edition that we present here today is the Brazilian one. Gabriel, how is the situation in Brazil? Where are you based exactly?
The masses in Brazil, they are now trying to survive. So people doesn't have money to buy anything. And Bitcoin is also one of these things. But at the same time, people is reading more, people is stuck at home. So everyone is trying to learn more. And we see not only Cointelegraph's numbers growing, but also mainstream media coverage on crypto is increasing. So I think the situation is still very bad, but we can take good learnings from that. And I think there is a positive side, if we can say it that way. People is getting closer to crypto, and this is good for everyone, I think. But yeah, we are still with other problems in the queue, and we really need to fix that before starting to think on investments or any other kind of things.
Thank you very much, Gabriel. A question that basically is present all over our chats. Guess what? where Bitcoin price will go after the halving. Guys, I'm sorry, we are journalists, so we can't speculate on the price, but I would like to ask you, what do you feel about the community you represent? Do you think that your country's community is more optimistic or pessimistic overall about the volatility of Bitcoin price? Okay, let's go to Italy. Matteo, do you think that the Italian community is positive about the Bitcoin price and the overall market after the halving?
Well, yes, I believe that generally speaking, people are positive about the price rising. I have to say that people who write most comments and are more, on social media writing about Bitcoin price are usually newcomers to the industry. It's very difficult for people that have been in the industry for a very long time to still be there doing price prediction, on social media. So newcomers tend to be more excited about the price rising very fast. And my perception was that everyone was thinking Bitcoin would skyrocket with this price today or maybe tomorrow very fast. So I'm also seeing some people who bought at the recent peak price, and today they are already disappointed, which is still fun in a way, not because they are losing value in terms of euros or US dollars, but because it's the same thing over and over again. Newcomers come and buy at the maximum price, and then they have to wait. They write less comments and everything else. And new people coming are the one always waiting for very fast pump of the price. So the general sentiment looks very positive, but I believe it's going to take some time, and everybody needs to be realistic with price increase. And the funniest thing was the discussion about the stock to flow model and these crazy numbers that you see on the stock to flow model, which got everyone super excited. So people are already, pre-ordering their yacht, their rich things after seeing the stock to flow, which is still nice that they are enthusiastic, but I hope that everyone can understand it's going to take time for the price to increase.
Thank you, Matteo. What about South America? And I'm not sure whether it's okay to talk about all the region of South America, but I still would like for you guys to find a consensus. So is the overall sentiment about crypto in South America is positive or negative? Like, you are the ones who know a lot about economic crisis, volatility, and all this speculative related things. Do you think that people are more ready to crypto because of this, or on the contrary? I don't know. Agustin, let's go by the alphabetical order.
Yes, I think that the general sentiment is that the price will go up. I don't know. I think that the halving, at least in the midterm, will not have so much impact on the price. I think that Bitcoin is the events of the real life of the economy and the political changes has much more influence than the halving has on the price of Bitcoin right now. I think that the outcome of this halving will swipe out the small miners, and the biggest one will win and will stay. And I think that's the most important outcome of this halving event. And in Argentina, we don't have so many miners because the energy is very expensive. But in Venezuela, we have a lot of miners, and we will see in the next couple of months how they are doing. If they will survive or not is a question. I don't know yet, but we will see.
Thank you, Agustin. Gabriel, what about Brazil?
Yeah, I agree with Agustin, and I think people in Brazil are very optimistic. And there is a funny fact on the halving this year, because the dollar is now worth the double as it was in the all-time high in 2017. So in Brazil, if Bitcoin rises up to $12,000, we will reach the all-time high prices in Brazilian reais. So even if the Bitcoin is almost the half of its all-time high in US dollars, in Brazil, it will be the biggest price ever. So people is very optimistic, and everyone is like hoping for this to happen. But at the same time, I think the people who is more involved with crypto, they know that miracles won't happen from one day to the other. But in general, I can say that people is expecting the price to rise. And as an example, in the biggest media channel in Brazil, they had a long article on their front page today saying something, Bitcoin halving is happening today, and it probably affect prices. So even people who never heard about Bitcoin before, they are now reading optimistic news and things saying the price will go up. So yeah, I think the general sentiment is that the prices will increase. And this is good, right?
Welcome everyone to the continuation of the Cointelegraph halving party. This is the second panel with me, the moderator, Andrei Shevchenko. I'm a reporter at Cointelegraph, and I focus a lot on technical aspects. I actually got into mining, or rather into crypto through mining. So I'm really excited to hold this panel. And with me, I have Josh GOODBODY, who is the head of growth at Binance, and ALINA Yao, who is the head of the OKEx pool. And also, we should have Marco STRENG, who is the founder and CEO of Genesis Mining, but unfortunately, we are having some problems with the connection and so on. But in the meantime, I wanted to kind of touch upon this aspect. So, Josh, Binance is not traditionally seen as a mining player, and actually, I was kind of personally surprised a little bit when I saw you at this panel, and then I saw that actually 2 weeks ago you guys launched a pool. So if you can talk a little bit about that, how the plans came to be, and what are your thoughts, or rather just what is your purpose behind this pool?
Absolutely, yeah. Thank you, Andre, and thanks to Cointelegraph for putting this great event on. Yeah, I mean, Binance is very much aiming to be an ecosystem in itself. So, you know, really what Binance is aiming to do is provide all of the various products and services that really make sense for our users, all under one hood within one ecosystem. So I think mining was an area that we've always had our eye on, right? It's a key part of the cryptocurrency, especially the proof of work cryptocurrencies ecosystem. And for us, really the key question was, how do we set this thing up to be as impactful and beneficial for our users and the wider ecosystem? So bearing in mind that, you know, we were perhaps slightly late to the party versus other ecosystem providers like OKEx, who are on the call today, we really wanted to make sure that we feel our way into it. We get as much feedback as we can from the mining community. You know, really what kind of service should we be offering? And that culminated in itself after a couple of months of really deep dive analysis and assessment of what needs to be done. That culminated in us launching the mining pool just around a month ago. So the mining pool allows us to really offer mining as a service, essentially, to the wider ecosystem. We bring from the larger miners to the mid-sized miners to even the smallest of miners. We're able to accommodate them within our mining pool. And that's really the beginning of the journey for us. So we see this as the first step into the mining business. And we're looking to broaden out the tools of and services that we're offering in the mining space out to a slightly larger audience over the next couple of months. So it's very much a work in progress, and we're later to the party than perhaps we'd wanted to be, but we're very much here to stay, and we're looking forward to engaging with the mining community more and more. Okay, so the first question I wanted to ask, and I think I want to start with Marco here.
because he's, I guess, more involved into this whole industry, but specifically about installations of miners. So how profitable is it to mine Bitcoin right now? Like, of course, I understand that it depends a lot on the devices you have, but is it actually a profitable industry right now, or are you guys afraid that it might eventually be bad times, essentially, for everyone?
Good question. Well, to answer that, I mean, it's not, it depends on miners, but it not only depends on miners. There's so much that is basically around how to do it right, and so much things that can go wrong. I mean, the people who follow the space, how often have we seen like burning mining farms on Reddit, or like very crazy things, like where whole data centers are burning or destroyed. There's really, the devil is also in the details. So I think it really is an industry. The mining industry is an industry that gets extremely underestimated, because there's so much new players that want to enter the space and then realize, oh wow, I think it's more difficult than seen. I think the industry have matured a lot. We are really now a very heavy industry, comparable to the gold mining industry. And to answer your question very shortly, it can be very economical, and that also means that it can even also outperform buying Bitcoin, but it can also be a very natural good investment. But you have to do it right, and I think and if you are not ahead of the curve, and if you're like not one of the most efficient miners, then it can be completely different. And it really also, of course, depends on the Bitcoin price. What does the underlying Bitcoin price do? That's also a very strong and heavy dependency.
Thanks. So the next thing I want to touch upon is the price. So, obviously the hype behind the halving is mostly because people think that the price will go up, essentially, because the supply is reduced. So there is less inflation of Bitcoin, and there is less sell pressure also. So I want to ask, perhaps this is a question best suited for Josh and ALINA, who are actually representatives of exchanges. How many miners are actually selling their mined Bitcoins right away? So if you can share some of these stats maybe, so that we can basically understand if miners are actually holders, or they are always selling for everything that they mine. So let's go with Josh first.
Sure. Yeah, I think that's a really difficult question to answer, because it's really dependent on the miner, right? Some have sophisticated operations where they use financial products, options, futures, to be able to manage their inventory in smart ways, which means that they aren't necessarily dependent on meeting their overall day-to-day running costs via selling Bitcoin. So it isn't necessarily a given that a miner that produces Bitcoin will sell that to meet their day-to-day their day-to-day running costs. Now, some miners also use financing tools. They will have some kind of rolling facility for fiat currency, dollars, euros, pounds, whatever it may be, to be able to meet their running costs. So it isn't a given that they're selling their Bitcoin just because they're mining it. And I think, just to tie this back to the event that's happening today, this halving event, a really interesting point by Marco, that we're going from 1,800 Bitcoin being mined on average a day to 900. That's a massive cut in the supply. Does that have an immediate impact on Bitcoin price? Well, it's very difficult to predict. Number one, I don't think anyone's got a crystal ball where they can make a hand-on-heart accurate prediction for that. But if we look back at previous events, if we look at 2012, we saw Bitcoin reach an all-time high about 12 months after. If we went back to 2016, we saw an all-time high 18 months after. So there is an overall, of course, supply constriction, which has a very beneficial long-term, should we say, move on the Bitcoin price. But it isn't overnight. It's not magic. It's certainly not something that will go from today to tomorrow and suddenly the whole dynamics of the market will be revolutionized. I think it's a slow and steady impact on the overall market dynamics of the Bitcoin market. And we're going to see an interesting trend over the next maybe 18 to 24 months which should replicate previous halving events. But it's certainly not something that we see overnight. And I think miners know this. They've been in the business for a long time. They understand the market probably better than most, actually. And they will have built a model by which they sell a certain amount of their inventory. They use sophisticated financial products to be able to manage their overall risk exposure and their day-to-day overall costs and operating costs. So it's a bit more of a complicated picture than just selling Bitcoin that they mine.
Alina, do you have anything to add to that?
It really depends on the the price of Bitcoin, and the data for the exchange is really a secret for us, right? And in fact, I think for most miners, they really still mine Bitcoin immediately. They prefer to hold the Bitcoin. Mining is not the same as buying Bitcoin. Mining has a certain entry barriers. So miners themselves are more early Bitcoin preacher and believers. So they believe that the price of Bitcoins will be higher and higher in the future. So selling in the future is better than now. Yeah.
Sure. So, well, actually, we have a lot of miners here I'm seeing in the chat. So I wanted to ask the next question so that we can see everything. How much did you make out of mining though? So is it actually profitable for you to mine? And maybe you can guys share everything with each other, and maybe you'll find some partners, I don't know. So, and actually I wanted to ask this question to Marco here. How much is mining a profitable industry? So you guys, of course, are in the fold essentially from, I think, 2013. Yeah. So a lot of people have this picture of miners as, these fat cat capitalists that are like getting rich every time, and they have these special deals on the ASICs, and they are essentially getting richer and richer. So how much of that is true, actually?
Good question. So, I mean, as you say, like we we're in this industry now since 2013, and mine since now around 7 years. And we have seen a lot of different scenarios and different markets. And I think that picture of like the fat miners that are just basically winning all the time and easily is unfortunately a bit a wrong picture. I think, and it also, it's a picture that has changed so much over the last 7 years. I mean, imagine like in 2013, there were people that were doing home mining a lot. There were a lot of people that just plugged their rigs in at home. It was partially even still GPU mining. It wasn't even ASICs out. And that has really shifted. You are seeing much more larger miners that and less home miners, less smaller miners. And those larger miners of course have some benefits because they like improve themselves over years. They have the economy of scale. They have large mining facilities, and they have an unfair advantage for a home miner in a sense that, like us, for example, we mine near the geothermal sources in Iceland, like completely at the end of the world, where the electricity is cheap. And it's cheaper than usually someone that has the electricity at home. So I think that's one aspect. But I think it really depends on the price, on the underlying Bitcoin price. We have seen a lot of miners, and I mean, particularly also because we not only mine for ourselves a lot, we also offer it to other clients via the cloud. So we have a sense of also what our users and customers are doing. It really depends. You can make a lot of money, and you can also, there are also times where it's more difficult and potentially you can lose money. The most important thing is to see, I always, when people ask me, what should I do? Should I buy Bitcoin? Should I mine? I always say, I think it's good to have a basket maybe of both. Do a little bit of mining, do a little bit of buying and holding. The reason is because it's two different natures also. If the price goes down, then it's not very, very good. You lose some money if you sell lower than you bought. You really lose money. If the price goes up, it's good. But on mining, you constantly generate coins, and that is a different nature. Yeah, it's really two different assets and types.
Thank you. I wanted to ask ALINA, how decentralized is mining, especially for Bitcoin? Can you share just a little bit of statistics, maybe like nothing too precise, but to essentially understand how many miners there are in your pool and what is the average hash power that they have? And actually, as an update, there is 27 blocks left till halving, so which is, I think, it's like 4 hours, maybe something like that, 4 hours and a half. So, anyways,
okay, so let's do a little bit brief introduction of OKEx pool. It is the world's leading comprehensive mining pool as the world's largest exchange packet mining pool. So we are the market leader for both POW mining and staking. Despite starting OKEx pool just 6 months ago, I just joined the OKEx 6 months ago. So we have experienced unprecedented growth across chains and frequently rank in the top 5 Bitcoin mining pool by hash power. Yeah. So and if you ask me how many miners, I just want to say maybe it's about 20,000. Yeah, I think so. But it's it's increased every day. And since our founding, we have strive to build a remaining mining pool like seems from our core exchange rooms. Yeah. And
that's a pretty respectable number, actually. So is it single miners, as in like entities, or it's just like different workers? So maybe it's like the same person controlling multiple miners. I'm just asking, like, how many of those are actually people, essentially? All 20,000.
Yeah, I think so.
Oh, okay.
But for one part is we just call the big miners, and another part is just a little hash power in their hands. Yeah, just maybe have a try. Yeah.
Great to hear. So actually, now that we have the halving, there's this maybe competition between who gets the last block. I don't know if that's true, if that's really important, but so who do you think will get it first? Like, do you guys think you have chances of achieving that? I mean, I think OKEx has some serious hash rate, but Binance, I'm not sure. So what do you guys think are your chances?
Interesting question. I think everyone needs to remember that even though mining is highly logical in nature, there's an element of luck, right? So mining is kind of probabilistic in its nature. So you can probably hypothesize which of the pools will have a chance of mining that last block, but there's always an element of luck that you need to bear in mind when you're modeling this. So who has the honor of mining that final block pre-halving? I wouldn't even hazard a guess, but it'll be very interesting, and it'll be a historical moment for that miner as they mine that final block. But everyone should always remember that there's an element of luck, which makes the whole thing even more interesting.
Yeah, exactly. So, Marco, do you think you will mine it as Genesis, or?
Well, we have a good chance. We would not mine it directly, as we're basically running. We are having partners on the pool side because we have very distributed operations. So we always go with a pool that is very strong in one area. For example, if for our European Nordic operations, we go with one pool. Then in America we have another pool. So I'm quite sure some of our pools will mine the block.
Well, yeah, I guess a small contribution essentially. Well, ALINA, actually, I'm not sure on the statistics exactly, but I think OKEx maybe has like 10% of the hash power, something like that. What's the percentage right now?
Maybe just 7%.
Well, you know, that's still a chance. I
But
guess.
Price in the future, maybe next month. Yeah. Good look.
Yeah, exactly.
Look at it. Yeah. I can see Michael's smile.
Well, so I wanted to touch upon some more kind of technical aspects here, because I think a lot of people believe that, actually, I mean, not a lot of people, but some believe that there will be kind of a death spiral as this halving occurs, which is basically to say that, you know, miners will just, since it will not be profitable to mine, the blocks will get slow, like there will be less hash rate, so blocks will be slower, and that will decrease profits further, and so on. That's kind of the concept of death spiral. And I wanted to ask, related to this, do miners actually mine at a loss during these times? Like, do you guys just decide, you know, like everyone gets together and says, okay, we need to do this for the betterment of Bitcoin so it doesn't die?
I think it's a really serious topic. To understand what's probably going to happen, I think, is to realize that particularly the large-scale miners, it's not as easy as just saying, oh, okay, today it's not looking so good, so I switch all off. Tomorrow, okay, it looks better, I turn it on again. That home miners can do that with a few rigs, yeah. But if you are like really in 100 megawatt plus areas, and you basically consume a half of a whole power plant, then it's a different scale and a different matter. And we realize that on our side too, you have to plan in advance. You need to basically, you cannot be that flexible. So I think that there will not be extreme radical changes in the now after the halving immediately. Most of the miners are seeing and waiting, and they have to go at least a few weeks in, and then have the flexibility to make some decisions. So I don't believe in that heavy, drastic death spiral scenario where you basically say, okay, now is the halving, and I turn off. And then the block time goes longer because the hash rate drops very fast. I don't think so. It will be more smooth. It was smoother also in the past halvings that I have experienced in the past too. And yeah, it's not that drastic.
Yeah, totally agree with that. I mean, we saw this in 2012. We saw this in 2016. Anytime there is a deviation from the status quo, everybody thinks, wow, something drastic is going to change, and it's going to be fundamentally damaging, or will, as you said earlier, this death spiral hypothesis. It simply doesn't match up with what we've seen historically as to how miners have pivoted and changed their business models to be able to meet, you know, the changing requirements of their mining business. So one, most miners have been here before. Two, they have sophisticated operations that will enable them to model what may happen in the future, so they're ready for certain eventualities. And three, they're patient, and they're able to be patient, and they will have put together some pretty medium to long-term thinking on this, and they'll be able to see what the market does over the course of the next couple of months. And that will really color their ability to ramp up their mining. Maybe they'll be, you know, putting their finger over the button to pull the trigger on mining, on buying new mining equipment, or maybe they'll see what happens in the market and they won't. But it certainly won't, at least in my opinion, lead to this, you know, this death spiral or so-called death spiral, because I think the market is much more mature than it was in 2012 and 2016, and people understand the fundamental dynamics within the market much better. So I think miners are savvy; they know what they're doing, and they're able to you know, pivot resources, make strategic changes very quickly to meet any of the market dynamics that may be coming up in the next 6 months or so. So I think overall, no to the death spiral.
So I wanted to go back into the price talk a little bit here. So historically, we've had this kind of bull run that preceded and succeeded the halving. And I think I've read somewhere that basically the price effect was actually stronger after the halving rather than before. So first of all, I wanted to ask, I think Josh is best suited for this. Do you think that the halving is priced in with all the craziness we've had, in the past few weeks?
Yeah, interesting question. I mean, there are a number of schools of thoughts around this, right? There are those that believe that Bitcoin is very much an asset that follows the efficient market hypothesis, which is, the market will behave efficiently, and therefore any price movement that happens post halving will not happen because the market is efficient and it's priced in already. But again, that's a hypothesis, right? There are other schools of thought that believe that, the market is fundamentally inefficient right now based on how new it is. It's relatively immature in terms of, the wider retail market knowledge of what's happening in the Bitcoin market. So by nature, it cannot be efficient. So because of these different schools of thought, I think fundamentally no one really knows. It's hard to say when we will see the price appreciation take place due to the supply squeeze that happens when the halving takes place. If you look at the historicals, yes, there is a trend after a halving event for the price to go up. We certainly have seen increased buying pressure in the preceding 2 weeks to this halving event. We've seen some all-time high volumes on various exchanges, including our exchange. 30th of April, we had $12 billion in one day take place across our markets, and that that was a number of drivers behind that, but primarily we think all of the hype around halving. So will we see a rally post halving? I think it's really difficult to predict, and I don't particularly want to predict because it inevitably ends up being pretty inaccurate. But I certainly don't subscribe to the school of thought that the Bitcoin market works within this model known as the efficient market hypothesis, which is everything is priced in at all times because the market is so efficient and rational and logical. I think the market is a little bit more multifaceted than that. And I think, what we saw historically, which is a gradual, slow increase in Bitcoin's price post-halving, is something that we're more likely to see this time around. So less of a big bang, more of a slow but gradual increase.
Actually, can you talk about more, is there an effect of maybe selling the rumor, or rather buying the rumor, selling the news? There is actually a person that, he's called Eraste Liamuremi. Sorry, I can't pronounce that. I apologize. He asked, can BTC price goes down after the halving? So do you think that there is actually a chance that, immediately as it happens, it will just go below what we have right now? Just as a general thought.
I mean, from my side, it's possible. It's possible. I think it would be foolish to completely rule that out as an eventuality. We really do not know. I think if you look at the historicals, it's fair to make a hypothesis that over time, i.e. the next 6 to 9 months, we will see a potential positive upswing in the Bitcoin price due to this supply squeeze. But what will happen immediately after the halving? Can a price reduction happen? It can. Bitcoin behaves in mysterious ways sometimes, right? And I think we'd be foolish to say that it's impossible that the day after or immediately post halving, that a supply squeeze will, completely rule out a decrease in price. I think we have to walk into this with eyes wide open.
So, well, our time is up. The next panel will be exploring the fundamentals of Bitcoin with Bobby Lee from Fundstrat and Emin Günsur from Ava Labs. So stay tuned for that. It's going to come in just the next few minutes. And thanks for our panelists here for this interesting conversation. Happy halving, everyone, and goodbye.
The halvening, going from 1,800 Bitcoins a day to 900 right now, all of a sudden, it's a big event, sure. It's a historically significant event. I'm here because I love Bitcoin. I'm here because I was involved in the early days. It's wonderful to be here. I think it's going to be the marker of a big rally. And that big rally has pretty much nothing whatsoever to do with the halvening. So I don't think that the reason why Bitcoin will go up has anything to do with the number of coins issued to the miners. The number of coins issued to the miners is going down by a bit. That bit is 900 BTC per day. And if you look at the number of Bitcoins that exchange hands per day, 900 is a drop in the bucket. So it's not going to be making an enormous difference in the number of BTC exchanging hands. It does cut the supply a bit, but it's not that significant. So that's one point I wanted to make. I think the reason why we're going to moon has, as I said, we will. And I'm a firm believer in crypto overall going up. And the reason for me thinking that is the macroeconomic conditions we live under. The economy just died because of the virus. The entire world shut down its economies. The totality of the world. Look around. There's nobody doing any commerce anymore. It's just kind of came to an abrupt halt. And when that happened, lots and lots of first world countries put enormous sums of money onto the sidelines. Not exactly into circulation, but that money has been distributed and is sitting around a dwindling campfire. As soon as people get the idea that it's okay to put that kindling back into the fire, this thing is going to turn into a conflagration. Every asset that people can buy that doesn't require a third-party review is going to go through the roof. So we're seeing this already with stocks. That crap is easy to buy, and there are a bunch of crappy companies selling worthless tokens that we call stock certificates, and they're enjoying really high price earnings multiples right now. And so that's happening. That money will be tired of going into really highly priced stock and will look for alternative destinations. And Bitcoin is one of them, and crypto is one of them. So that's why I'm bullish. But when it comes to halvenings are actually a dangerous event. You are cutting down the security of your system. As the reward that goes out to, let me give you two arguments, one from distributed systems, the other from economics. One argument for why halvenings are not the best thing on earth for a system is that you're lowering the subsidy that you are giving out to buy security. There will be fewer miners after a halvening. This has historically been true. The hash rate has dropped a little bit following each and every one of the halvenings, and that's as we would expect. So that is not so great. On the other hand, it's not the end of the world. I don't want anybody misconstruing what I said. There are coins today. Bitcoin Cash is one of them. Bitcoin Satoshi's Vision is another one. They have very low hash rate, and they are eminently attackable, and nobody attacks them. So just lowering of your hash rate is not the end of the world. This particular halvening poses no risk whatsoever for Bitcoin, but the subsequent ones might actually cause problems. The other issue that Bobby talked about, which is you can buy Bitcoins early on, and then they get more and more scarce, and at some point there's like so little being mined that you got to think about this. You can only make money as people come into the crypto space. You can only make the money that people bring in fleeing from fiat. And if they're not doing that, you ain't making that money. There's no way. Whose money are you going to make? For you to take $1 out, somebody else has to come in and buy a Bitcoin from you. And so if you're one of the early people who mined at 50 per block, for you to get those Bitcoins converted to cash, well, then somebody will have to buy them off of you. So it's not just because they're scarce that they go up in value. The demand has to be there. And I wonder about that demand. Why would somebody come into Bitcoin now? Has Bitcoin really lived up to its promises? Has it been able to compete with fiat? Are people fleeing from dollars or Turkish liras or what have you to renminbi, yuan, whatever, to BTC? Is that happening? That's a real open big question for me. And as far as coins go, coins that are purely speculative, I don't see any demand for them that's growing. I think we've reached max saturation of people who understand this tech, and they've bought in. And the other people who have not bought in yet are probably not going to buy into Bitcoin. It's just that they've heard the narrative. It's been 12 years. And if they aren't buying at this point, they probably are not going to buy ever. So you got to have a compelling case for them to get into the system.
So you think Bitcoin is saturated right now in terms of buyers?
I think Bitcoin has saturated its market. And for it to make the next level up, like, people talk about these 100K, $1 million coins, etc. It has to do something it hasn't done before. It's been doing the same old thing, which is what? Compete with the dollar, go against the hegemony of the US dollar. Let's pull down the Fed. And, people go down this path. It's a fine path, right? You start out, and Bitcoin is fantastic. It does things that nobody could do, right? You could send magic internet money over email or whatnot. And so that was great. It got all of us excited. But these days, it can't do those things effectively. Venmo is better, right? Why? Because Venmo, it's centralized. It's absolutely horrible, etc. But it works faster than Bitcoin does. You can buy things with it. And so Bitcoin has all these corner cases. It's slow. The latencies are very, very high. 6 confirmations. You meet someone in a parking lot of a police station to buy tokens from him, and you give him money. Then you have to sit in the car in this awkward fashion for an hour for the transaction to complete. Who would ever do that? That's crazy stuff. And the throughput is very low. Everybody knows this stuff. And the Lightning Network will come someday, maybe. I built the world's fastest layer 2 solution, much faster than Lightning. And I thought, this is not going to happen. This is going to take a decade or more to happen, if it ever happens at all. And that's just not where the future is. The future is in fast layer 1s. So that's what I work on these days. But regardless, it's Bitcoin. We all love Bitcoin. I want to see it succeed. If anything has a chance against dollar and euro and so on, it could be Bitcoin, because we've all worked to create mindshare around it. But at the moment, let's face it, it's just a speculative instrument. If it goes up today, it's going up today because we create this excitement around it, because we get people excited about the halvening, and people think that other people think that the halvening will go up, and therefore they go in there. So there's a second layer thing going on there, and then it multiplies on its own. But it's all the same people's money. It's just we kind of reshuffle. Some people get wrecked. The exchange operators get rich. And it just kind of self-perpetuates. And to see those numbers that Dan Moorhead is talking about, we got to tap into a source of wealth that is outside crypto right now. And I don't see Bitcoin doing it with its own current narrative at the moment.
One of the first things you said about 5-10 minutes ago was about the supply from 1,800 a day down to 900. What was your conclusion on that? I think I had a disagreement, but let you rephrase it.
I think the amount of coins that are being reduced in supply pales in comparison to the amount of coins that exchange hands per day.
Okay, so you're absolutely. I agree with you that the total supply for buyers is a combination of what's mined and also what the hodlers are letting go.
Yeah.
Right. So, but the overall new supply is also important. If you look at the trade of gold, since you're economists, you're traditional academia, gold is a physical asset class that is decentralized, that is global. So today, I think there's about, if I recall correctly, there's about 400 tons of gold mined per year of new gold above ground. And there are a total of 180,000 tons. Let me do the math here. 400 by 180,000.
Just a second. Eamon, would you mind just lowering your camera angle a little bit?
That's very hard. How about this? Is that good?
That's perfect. Thank you.
Okay, awesome.
Yeah, I look at the figures for the new gold.
Yeah.
So basically, the point is gold is also, it trades similarly. The amount of gold that gets traded on the exchanges, the London Spot Gold Exchange, the COMEX, the futures exchange, and all that, the total aggregate amount of gold that gets traded is a huge multiplier from the actual amount of gold that's mined a year. Yeah. So the world mines about, I'm looking at some of the Wikipedia, some of the stats, about maybe 2,000 to 3,000 new ton of 2,500 to 3,000 tons of gold per year. Okay.
Yeah.
So if you look at 3,000 tons divided by 180,000 tons, that's about 1.6%, 1.7%.
Right.
And so I don't think. So if you look at all the gold, all the jewelry, there's a lot of recycled gold that comes out. So if you look at all the gold that gets put into new things every year, whether it's jewelry, whether it's gold bars, whether it's gold plating for industry, it far exceeds 2,500, 3,000 tons of gold. And the reason is people who have gold, they recycle it, they bring it out. People have gold coins, they melt it. So there's a lot of supply that comes in. And then the demand is a whole industrial global world, whether it's collectors, whether it's industries. So I think it goes to show that it's not, even though we can't measure the new gold versus the old recycled gold, because gold, like Bitcoin, is fungible, right? If you get a new piece of gold, maybe like for example, in America, they can make the gold eagles and gold buffaloes, right? Yeah. So that gold, you can't tell whether it came from a Russian mine or a Canadian mine. Where you can't tell whether it was mined in 2019 or whether it was mined 100 years ago, right? So that's the same with Bitcoin almost. So so gold inflation rate is 1.6%, 1.7% a year right now. So Bitcoin is going to be 6.25 divided by about roughly 19 million. 6.25 times 144, which is 900 times 365. That's divided by about 19 million, let's say. About 1.7%. So we're reaching the point where this year, this is very exciting. This year, we're reaching the point where Bitcoin's inflation rate will finally be as low as gold, almost. And you give it another 4 years, it's going to be lower. That's going to be historically unprecedented, right?
So it is. So Bobby, one thing that we have to be very careful that a lot of Bitcoiners, but not Bitcoiners, I shouldn't say that, maxis, especially recent maxis, conflate is this inflation issue. That what you are referring to is emission, not inflation.
It's inflation.
No, it's not the same thing. Emission is related to inflation, but not the same thing at all. Inflation is measured by the change in prices for goods that are priced in Bitcoin, whereas emission is the rate at which you're printing money. We've seen throughout history that you can print enormous sums of money without impacting inflation. So
fair enough.
You are right.
Emission, yeah, sure. Emission.
Yeah, okay. So the emission curve is going down. That's great. That's good. But let's do the math from the other perspective. So let's take the mindset of your typical person that a maxi is trying to get into go to Bitcoin. There are two big issues that are ahead of us. One, the sale is that put all your life savings into Bitcoin today, so that when the emission goes down in the future and these things become really scarce, and this is the magic part, magically the demand even increases or at least stays the same as where it is, that such that the price goes up, you will get rich. Well, you know what? It's been 12 years, right? So a lot of us have been through here before. Bitcoin is no longer a young system. It is no longer the early days. Anybody who thinks it's the early days, they're crazy. We've had the block size wars. We had the splits. The core developers are now working on layer 2 solutions. They've stopped innovating at the core layer. So we are definitely in chapter 2 of Bitcoin history. So given that, what are the chances that there'll be so much demand that all of these people, all of these internet dwellers that got into this early on, and I was one of them too, will all get rich all at the same time, and they will all be able to cash out? I think that demand is just not there. That demand has to be there for reasons other than speculation.
But you're assuming that to get rich you have to cash out. I fundamentally disagree with that. So first of all, let's understand, see if we agree that getting rich is not a bad thing, right? Make sure we don't change it, right?
Not.
People, the world, in a free world, some people will be more rich, some people will be more poor, and that's just the reality of life. Obviously, unless you want a total, socialist society where everybody has the exact same amount of money. But actually, let's get back to the main point. So you made a point that to get rich, people have to cash out. So I disagree with that fundamentally. Here's why. I was born in 1975. I grew up in the 80s. I remember in the 80s, and even now, a lot of my family friends, aunties and uncles, a lot of them made money in real estate. And today, a lot of so-called rich people own real estate and stocks. Would you agree with that statement?
Sure.
Okay, and they're rich. Some are super ultra wealthy, flying private jets, but others are just rich, driving BMWs and Mercedes Benzes and living in a nice, 3-4 bedroom house. Okay, My
So
point
they cashed
is,
out. So you're telling me that they cashed out.
My point is these rich people did not cash out. Think about it. The people who own Mercedes Benzes and BMWs and whatever, do you think they are net wealth 90% cash? Of course not. All these rich people are still, their net wealth, I think over 90% of it are all tied in assets, whether it's real estate or stocks. Now, this is not crypto people. This is the old guard, the old school rich, right? I think if you ask any rich people how much cash, like US dollar, Canadian dollar, euros, like how much cash they have in their bank accounts, for many of them, it's less than 10%. I haven't met a single rich person who has more than 50% of their net wealth in cash.
Sure, Warren Buffett would disagree with you right at this moment, but your general point stands.
Hold on a second. How is Warren Buffett disagreeing with me? Do you think he personally has more than 50% of his net wealth in cash?
I actually don't know. I just remember reading just 2 weeks ago that he's holding mostly cash these days, but it doesn't matter.
No. He's talking about his Berkshire Hathaway company, which has a lot of cash.
Bobby,
he's not mostly in cash.
I'll concede your point. You are right. So yeah, people should be holding their assets in, or rather, their wealth in assets. And they should have a diversified portfolio. That's the sensible thing to do. So you have to be careful about. So you have to be careful about paper riches versus actual riches. When you have shallow markets and a culture of hodling, then you can end up with a bunch of people who think they got rich, but there really was never a moment where they could have actually converted that value of that asset to actual personal gain. So for a moment, 2 years ago, everybody and his brother thought they were super freaking rich. Every idiot suddenly turned into, essentially fancied himself as a big financial genius. We had people with, all sorts of background, no background, no kid. No,
that's bad. That's bad.
That's terrible. They started quitting their jobs. People started doing crazy things where they thought, hey, I could have been really rich because for a moment when Bitcoin was 20,000, my account had more zeros in it than I've ever seen in my whole life. And you know what? Sure, I understand that, but that's stupid, frankly. And that's really the thinking behind a lot of maxis. And I should remind you, by the way, Bobby, that Bitcoin is not the only asset. It's not the only capped asset. I mean, there are a billion other not billion, but there are a lot of other capped assets.
Tell me other capped assets. I don't agree with that. There's gold is capped, but what else is capped?
There's every other crypto is a substitute good for Bitcoin. So today, Bitcoin does what Bitcoin does. Litecoin, as you well know, is a capped asset. The coin I'm
that's like saying every other metal is a substitute for gold.
Yeah. So what you're trying to do.
Do you agree with that? You think every other metal on Earth is a substitute for gold?
No. What you are trying to do is essentially create some kind of a notion that Bitcoin is equivalent to gold. And you know what? Gold has certain properties, like it's shiny, it looks cool. People like to wear it on their neck and so on.
Yes.
And Bitcoin does not have any of those properties in excess of any of its competitors.
I hugely disagree with that. Bitcoin what it has going for it is a market cap and the what we call the industry adoption. It has the highest rate of adoption and pickup.
That's
a network effect.
It has brand recognition beyond anything. Let's talk about network effects.
Let's talk about network effects. So let me ask you. Don't you think Bitcoin's network effect should give it a price premium over other altcoins and shitcoins?
Let's talk a little bit about network effects. So the network effects and Metcalfe's law that people like to quote come from social networks where there is something happening inside the network. And as you get more users, the something that happens grows. So if I have N people and I bring another person in, he interacts with all other N people. And therefore, he creates N squared of value. So
exactly.
We
understand that. So we understand that. So does Bitcoin have network effect?
Let me get to it, Bobby. So when you go from N to 2N, you go from value of N squared to 4N squared. It starts going up exponentially, which is fantastic.
Of course.
Now, people have looked at this in great depth for the internet because people used to make this case for fluffy internet companies during the dot-com boom. You were born in '75. You were around.
Those are all just marketing. But let's get to the question: does Bitcoin have network effect?
So
no, I don't want to talk about pets.com and internet.com bubble.
Oh, you know the bubble.
Network effect.
You know which topics you want to run away from. That's great to see. But yeah, pets.com.
I'm not running away from them. Bitcoin is not pets.com.
Is it not? Like, how is it different?
Pets.com had no network effect.
Well, does Bitcoin have a network effect?
Absolutely. Let me show you something. This is a keyboard, a wireless keyboard I have in front of my screen.
Yeah,
it's a QWERTY keyboard layout, right?
I was wondering
QWERTY,
why you had a
QWERTY keyboard layout
like that.
Okay.
Is that for like people who can't see stuff? Is that the Reader's Digest edition or something? I thought that was your calculator. It's huge.
My calculator's over here. Okay. So get to the point. This keyboard layout has network effect. Why do you think we were typing QWERTY keyboard, right? In Europe, I recall many years ago in France, they have a different layout. Right?
So, okay, so let's go through this.
But
so
you're not addressing my point. You're
I
avoiding my
am.
topic.
Well,
Bitcoin has network effect, right?
You're interrupting me, so it makes it a little harder. But let me just go through this. So Jackson, let me just finish the thought. Maybe it's very simple. So in the Bitcoin world, people do not interact with each other. They interact mostly with exchanges. So to go into Binance, yeah, you can get into Binance with Bitcoin very easily, but you can get into Binance with just any of the other shitcoins as well, as you call them. So
you're grossly simplifying the situation, right? The point about the Bitcoin network effect is that there's infrastructure, there's people. Look at the three of us, okay, right now, and you look at CoinMarketCap, the top 100 coins. Yeah. How many wallets and receiving addresses do you have for the top 100 coins and tokens on CoinMarketCap? I only have 3 or 4 or 5, and the ones you have, the overlap is Bitcoin. For the three of us, the overlap is Bitcoin. The overlap for the 10 million people is Bitcoin.
Right. That's right.
So that is a network effect. It's just like we all know how to type on the QWERTY keyboard. Maybe you know how to type on Dvorak. You know how to type on
I see the misconception you have. You're confusing the causal, the cause with the result. So the result is, yes, Bitcoin today has high market cap. That's undeniable.
It's not market cap. It's talking about circulation. I'm talking about adoption. I'm talking about we all.
Okay. You can interrupt me all day long.
In the world.
You can interrupt me all day long, but we're not going to get to
Bitcoin.
Okay,
whereas you're not acknowledging that, right?
Let's just take a moment. Maybe let's switch topics here. I'd like to actually take a question.
But I want Emin to state whether he thinks Bitcoin has network effect or not.
So that's a nonsensical. That's a nonsensical statement. So of course, everything has a network effect, but it's not n squared. It doesn't work the way you think it does.
So you're being too academic about it. I'm talking about Bitcoin compared to the 999 other coins on CoinMarketCap of the top 1,000.
Look, I can talk over you just as well as you can talk over me, and I can interrupt you.
Yeah, because you're losing the argument. You're refusing to answer my question.
I did.
Does Bitcoin have more or less market
That's the stupidest question I've heard.
Okay, I think you're the stupidest person I've met.
Guys.
You're the stupidest person I've met.
And then, Bobby,
that's great.
I mean, please. Let's not get into insulting each other.
No, he called it a stupid question. Why is it a stupid question?
Because it's nonsensical. It's ill-formed.
You're nonsensical. You're ill-formed.
I think we should move on.
Bobby,
let's move on to different questions.
When you can't actually form.
What's ill-formed? I'm asking you: does Bitcoin have a better market networking effect than the rest of the 999 top coins on CoinMarketCap? It's a simple question.
Okay, so let me give you.
You think they all have the same network effect?
Okay.
So you keep interrupting me, and you will probably do that for a long time, and we can do that, Bobby. But you're not going to get anywhere. It's just anybody who's watching.
You're repeating the same argument.
We'll see what's going on.
Bobby,
go on with your answer. You're repeating the same excuse. I'm interrupting
no excuse. You haven't been able to let me finish, so it's not. We're not going to get anywhere.
Because you don't refuse. You refuse to finish. Go ahead.
Every coin
and say the answer.
Every coin has a network effect. Every single one. So the question you want to really ask is, does Bitcoin enjoy a dominant market position? Question 1. Does Bitcoin enjoy a special n squared kind of an exponential growth in value because of its of the number of.
Okay. It looks like you guys got muted there for a second. I'm not sure what that's about.
Okay, I've unmuted myself, but so I think there are some good questions we could ask.
Yeah, I think we should move on to a different topic though. It seems like we're going in circles a little bit with this one.
I don't know why we ended up butting heads on this. So of course everybody has a network effect. That's normal. But the question is it here to stay? Is Bitcoin number one? Yeah, of course it is. Bobby, anybody can see that.
Okay, let's move on to the next topic. You've compared Bitcoin to Venmo and payment systems. I hugely disagree with you on that.
Okay.
Bitcoin is an asset class that is a digital asset. It's a store of value. Venmo and payment systems is not. In China, very popular WeChat Pay, Alipay. In the US is Venmo. There's PayPal. I'm sure there's many payment systems in all of Europe. And even in Africa, there's M-Pesa. So Bitcoin is not merely a payment system. Do you agree, or do you think it's merely a payment system?
You're getting triggered. Don't be triggered. So
no, you're interrupting me. Let me ask you the question: Is Bitcoin merely a payment system, or is it much more like an asset class?
This is actually a good question for chat. This is a good question for our chat as well.
Jackson,
you guys, everyone in chat, do you guys think that Bitcoin has real world utility, or do you think it's merely just a speculative asset? These are the two sides of the argument we're doing now. I'd like to see what you guys think about this. You know, are you just in it to see it moon, or are you in it for the narrative of it, to see it be able one day to be able to purchase goods with Bitcoin, to everyone using it as a form of currency? Yeah, chat. What are your thoughts on this? And let's hear Emin's take.
So yeah, I think we can agree on this, that Bobby is right. Bitcoin is the first of many different kinds of crypto assets. And it holds a special lifetime. It has special properties, not shared by gold. It's very different from gold. And it's got a bunch of competitors to what it does that do those jobs better than Bitcoin sometimes. But it's definitely not just a payment system. In fact, it's piss poor for payments. It can't be a good payment system. We know this. Everybody says this.
So why do you complain about the low transaction rates then? You know it's piss poor already.
Yeah, okay, if you're going to admit it, that's great. So there are a bunch of use cases that these assets can be good for, and payments is not one of them for Bitcoin. It's just not one. And it's okay. Now, you can say it's a store of value. I also think it's not very good as a store of value. It just isn't. Well, because it fluctuates. It's just yesterday, it went down by 10 to 15% in one day.
But depends on the time frame. For the last 9 years of how my Bitcoin, it's done a tremendous job of storing the value for me.
None of us bat an eyelid when it goes up and down by 15 to 20%. It's just what crypto does. So,
but even for the last 2 years, it's done a tremendous value for me in storing the value I've earned.
Well, look,
I think
there's a difference. Go ahead, Jackson.
Yeah. There's an argument.
I want to make a point about store value. So it's all about long-term and short-term, right? To me, I care more about storing value long-term than short-term. For my $100 bill, US dollar bill, I don't have my wallet in front of me. It stores a value very well from day to day, from one day to the next day. But when you look at a range of years, 1 year, 5 years, 10 years, the $100 paper note, it's a terrible job of store value 10-year period. But on the other hand, Bitcoin as value, as a asset class, it stores its value terribly from one day to the next. It might go up by 5, 10, go down by 5, 10%. But over the course of 3, 5 years, 10 years, it's a great job.
So once again, I think what we're seeing is adoption of common finance terminology by Bitcoiners and corruption of that terminology. So let's be very careful. Store of value, for something to be a good store of value, it should have liquidity so you can cash out, and it should have predictability. If you don't have predictability, it's not a good store of value. And then, of course, it has to match your investment or your storage life cycle. So if you're storing for a long term, that's great. If it's short, that's different, etc. So Bobby's pointing out that Bitcoin is not very good at some aspects of this equation. And he's
agree
right.
with you. Yeah,
we agree, I think. So, I mean, Bitcoin is what it is. We're both reasonable people. We've both been around, and we've seen it go up and down. And the word store of value, I think, is irresponsible for your typical retail investor. I think that nobody would get away with saying that and then watching people lose their life savings overnight.
No, I agree with you. I agree with you. People mention store value for Bitcoin because it's as money. They talk about the three aspects of money, but Bitcoin, I think, is more than money.
And so I think the first question that I want to ask you is about the price of Bitcoin, and if you think the halving will impact the price, and if you still stand by your prediction of Bitcoin reaching 250K by 2023.
Yeah, actually, by 2022 or the beginning of 2023, I fully expect it to be reach 250,000. And I didn't realize it was because the dollar was going to crash. I didn't realize they were going to just print dollars, $9 trillion worth of dollars, to degrade the dollar and make it more interesting to be buyers of Bitcoin. But yeah, I stand by that prediction. I think the halving is happening, and historically the price doesn't come up until about 6 months later, when people realize they're short of Bitcoin and they need to buy more, and that it's costing miners that much more to keep the system going. So I don't expect an immediate price jump. I expect that sometime over the next 6 months there is demand that can't be satisfied unless people buy, and they have to. And if people aren't willing to sell, the price will just keep going up. So yeah, I suspect that we will see a price rise in about 6 months, and I think that we're going to, by 2022, 2023, we're going to be starting to use Bitcoin as much as we use dollars, and the usage will spread. It's interesting, COVID has made it so that usage has sort of accelerated because people have been trapped in their homes and they're willing to try things. They're trying VR, they're trying remote medicine, they're trying a variety of new things that they never would have tried if they weren't stuck in their homes. Because when there's a bull market and everybody's happy, nobody really wants to change anything. Let's keep this going. But when there's a disaster, people say, wait, what? Yeah, what do I need to do? And so I think the acceptance of Bitcoin has actually accelerated. So, but I'm not going to accelerate forward my prediction, because my prediction is based on general usage, and general usage won't happen until things like open node are throughout all of the retail community. It won't happen until people are using Bitcoin to tokenize real estate, all those things, and they're all coming.
Right.
And smart contracts, and then it probably won't happen until we have a good accounting system built around the blockchain. In fact, I'm looking for a company that is building an accounting system around the blockchain. I think that would be a really valuable thing for the whole community across the board. And it could push for inflation down the road. And that would mean that people would want something that was much more stable, and Bitcoin would be much more stable. And people say, oh, well, Bitcoin's very volatile. It's actually the opposite. One Bitcoin is still and will always be worth one Bitcoin. It's just all these other currencies are volatile as they slowly disappear from our use. They'll bounce up and down as they slowly disappear from our use. And so I think it's a natural thing to want a currency that's global and open and transparent and decentralized, away from government interference, and something that's a safe place of value where people can they can store value, but they can also spend it very easily. I mean, where gold, you can store value, but you can't spend it very easily. With Bitcoin, it's very easy to spend. I could go buy a cup of coffee for Bitcoin in most Starbucks.
Right. Yeah. No, and I'm glad you brought up gold, because I was going to ask you what you thought about that comparison of Bitcoin and gold. I mean, do you have any other thoughts on that? Because, you know, people make that comparison a lot of times.
Yeah, the reason they're thinking about gold right now is that weird things are happening out there in the economy. First of all, companies are not doing well because for 2 months they've been locked in place, and employment has fallen really badly. 33 million people in the U.S. are unemployed, and probably 10 times that globally. And when you have those two things, you're thinking that's the beginning of a real recession, depression. But the stock market's raging high. It seems like a weird disconnect. And in some ways it is. In some ways you think, oh, they laid off people and so they'll be more profitable. But all those layoffs mean that there are fewer consumers. So longer term, that's really dangerous for all of these businesses. Well, so people go, where do I go to store my value? If I'm concerned that they're printing dollars willy-nilly, and I'm concerned about the stock market being too high, where do I put my money? Well, Bitcoin's the natural place for all of us who understand it. The people who are living in the past, they might go to gold. Gold was historically the store of value, the place that people would run to when things got uncertain. And I think that that's great, except spending gold isn't very convenient. But it does retain most of its value, although it can be mined, it can be diluted. The value can be diluted over time. I guess we'll always need it for jewelry. We probably always will need it for computers. And so there are some actual uses for gold. And it's a commodity. It will rise up, it'll fall down, it'll rise up, it'll fall down. Whereas Bitcoin's a real currency and can be spent and can be saved. And there are only 21 million of them, so grab them while they're hot.
Tim, we've got another question from Priya Stevens. She wants to know if you can give an opinion on the Chinese digital currency DCEP, and what do you think of stablecoins in general? When will we see the digital US dollar, and will it become a game changer?
Yeah, I think it's sort of some of the benefits of digital currency and all the drawbacks of fiat currency. I think the stable coins, you know, I'm kind of interested in Maker because of the dynamic and the way it works. And it's kind of interesting, and it's a nice bridge to this world where the world goes crypto only. I think governments are looking at this and they're saying, how do I keep control over my people? How do I keep my barriers up? What do I do? And the Chinese government has instituted a digital coin. Sure, maybe it's easier to move around than the renminbi is, but not much. And it's not useful globally. It's not decentralized. It's very centralized. It's not cross-border. It's not a global currency. It won't be recognized in other countries. What's the point? Why are they doing it? Well, they're trying to make it, they recognize that their claim to power relies on tribalism. It relies on having enemies, on having borders, on having restricted people. Well, the moment the people recognize that these borders are very fluid, that there is a better currency, that decentralized world is where we're all headed, and that governments have to start competing for us rather than us working for our government, By the way, when I grew up, the government was always working for the people. It seems like now the people are working for the government, and there's something very wrong about that. And that's where revolutions start to happen. But in any case, I think globally we're going to have a very nice peaceful revolution, because all these guys who are sort of clinging to power and trying to say no, use our cryptocurrency are just trying to centralize again. Well, the rest of the world is going, no, hey, it's so much better to decentralize. And then they're trying to put up more trade barriers when the rest of the world's going, no, we're better off when we have free trade. So what are these people actually in power? What are these people actually trying to do? And is it for the good of their people? No, it's not for the good of their people. It's for the good of themselves. And they're being incredibly selfish. And think about this. They're being incredibly selfish to the detriment of 1.3 billion people in China. They should be open, transparent. They should open their trade barriers. They should open the trade. They should open the currency. They should be open, and they will be much wealthier. They were open for many, many years. Deng Xiaoping opened up China. That place boomed. Everything was fantastic. Now they're closing it up. The entrepreneurs are kind of head down, tails between their legs. It's not a pretty sight. And now they're going, no, we'll have our own cryptocurrency. Well, that's baloney. It's not. Yeah. It's going to be a centralized, controlled, government-controlled currency, and it's not going to be worth anything more than just regular RMB.
Hi, everybody. My name is Dylan Love. I work for Cointelegraph. Happy happening to you all. The central question that this panel will explore over the next hour or so is this: will Bitcoin remain dominant as altcoins proliferate, or do altcoins pose some credible threat to Bitcoin? Before we meet our esteemed panelists, my ukulele and I would like to read a prepared statement. It's the Bitcoin halving. It's a Bitcoin halving. It's the Bitcoin halving. Miners get a pay cut today. You're welcome for that. You're welcome.
Well, Dylan, I'd like to say thanks for having me on this. I didn't realize that you were a ukulele player. I actually have my ukulele handy as well. I didn't write a song, but maybe by the end of it, I'll come up with some lyrics for
Very good.
A halving song of some kind, a halving song of some kind.
Could you compare and contrast for the audience why Bitcoin Cash works better for you as a peer-to-peer cash versus Bitcoin?
Just much more recently, the narrative about Bitcoin has been, no, you should never spend it, just hold it, and you can use it to speculate on the speculation of future speculators speculating on other speculators. Well, that's not interesting to me. I'm interested in building peer-to-peer cash for the world that empowers each and every individual to have complete control over their own money, to buy and sell things and send payments and receive payments from anyone, anywhere in the world.
Hey, Alex, I'm not about to be so brash as to ask you for financial advice, but let's pretend somebody comes to you and they say, hey, I'm really interested in this cryptocurrency stuff. Should I buy a bunch of Bitcoin, or what about all these other altcoins out there? Should I buy Litecoin or Bitcoin? How might somebody process that question? What's the thought process there?
You weren't going to ask me for investment advice yet. The question's posed directly is what crypto would you buy?
I can't think of a single thing ever in the entire history of humankind that's only used as a store of value without having some additional use case. And the additional use case for Bitcoin used to be the spendability or fungibility to use it everywhere. And that fungibility has been damaged, or that spendability has been damaged.
In terms of what crypto I would recommend, like I never recommend people buy any specific kind of crypto. I would say, do your own research, and find something that you're comfortable with. If you have to like put a gun to my head, I would say probably to own BTC, simply because of the consensus around its value and the fact that it's widely held. But that's not really like a strongly held view, to be honest.
I mean, I think one of the sort of misconceptions out there is, people say there's 100 million people that are using cryptocurrencies today. I think the market is tiny. I think it's 500,000 to maybe 1 million at best.
In regards to BSV specifically, you'll never hear me saying anything bad about it out there. other than the main business developers behind it are busy suing everybody in the space. So they're suing me, they're suing Vitalik, they're suing CZ, they're suing everybody, and then they're threatening to sue the entire world with their patents. And so, like, to me, that's just the exact opposite way to go about anything in the cryptocurrency space.
So how is institutional money going to affect this conversation? Paul Tudor Jones bought a bunch of Bitcoin last week. He did not buy Litecoin. He did not buy Bitcoin Cash. How do we interpret this? What does an institutional involvement, which happens mostly with Bitcoin first, when will that trickle down into altcoins, or will it?
Most of the institutions that we think of that would buy this asset class would be, you know, hedge funds, maybe certain family offices. Really, I think they're looking for price exposure. I'm not sure they're, you know, deeply ideological about it. And so I can see, as a result, whatever market has the most robust derivatives market for that asset is the one that will see the largest uptake. And, you know, considering that most of the underlying crypto assets are fairly illiquid, there's no real justification or rationale to create a futures market for them.
I would love to hear you guys talk about a hypothetical time. I know it's about 100 years away, but what happens to Bitcoin after the 21 millionth Bitcoin is mined? Where's the incentive for miners to continue perpetuating the system if they're effectively being rewarded zero?
There's been lots of arguments.
Ask my grandkids that question.
Sorry, what now?
I said, ask my grandkids that question in 100 years.
Okay. Okay.
No.
And I witnessed lots of the arguing over that exact question on the forum, and people have been arguing about that from the earliest days. And so, like, there's three different ways. The two most common paths forward are that you limit the block size and you force everybody to pay really high fees, and those high fees on the network will then pay for the miners to continue mining after the block reward is gone. The other path, which I'm the one that, you know, I'm the most fond of this one, is you allow the blocks to scale, you allow it to become money for the world, and you have billions of people using it every single day for transactions, each paying a very, very small fee. And the aggregate of that very, very small fee times billions of people with their billions of transactions is enough to subsidize the miners into the future, can incentivize them to continue mining. And then the third option that's probably the most controversial is you change the 21 million supply limit and you continue to have a block reward on into the future. But I think, you know, that's our great grandkids' problems or something. It's not really our problem. This is 100 years into the future.
I still think, at the risk of asking another silly hypothetical, what happens if there's some breakthrough in math and the math that underpins decentralized ledger technology can somehow be picked apart? First of all, is that question ridiculous? Is this even a possible thing?
It's not ridiculous. It's totally possible, and people will have to make some changes pretty quickly to solve whatever issues or whatever changes. But that's happened in the past, right? So, like, and it's going to continue to happen in the future. So far, we've seen pretty good. So even quantum computing is going to be a big issue for Bitcoin. So once quantum computers have a certain number of qubits, you'll still be able to use Bitcoin, but you'll never, ever, ever be able to reuse the same address more than once. Once you've moved funds to a particular address, you'll have to move all of them out in a single transaction and never, ever, ever reuse an address ever again. Because if you reuse an address, it'll expose the private key once we have quantum computers.
I've got a question from Julian in the chat. He says, I'm writing my bachelor thesis right now on the topic, can Bitcoin replace the euro? What is your guys' take on it? What do you see are the most important points?
I mean, if Bitcoin replaces the euro, it's because the Eurozone doesn't exist anymore. Because I don't think that region would exist. If Bitcoin is the standard currency, there's no reason to even have a Eurozone, because you don't even need a monetary union. You would just be using a form of digital payments that is accepted everywhere. And then, what would be left is countries fighting for taxation. And I mean, it would be pretty dark if it ever happened, but I don't know.
The EU is a monetary union without a political union, right? I mean, it's not the United States of Europe. They're all different polities. And so it's a system that's inherently very shaky and weak. And I wonder, the euro itself is only a couple decades old, and whether it lasts a couple decades, I think is probably like a coin flip, honestly.
Tom, we've got a question for you specifically from an audience member named Alexis, who asks, do you think blockchain and cryptocurrency technologies can evolve our democratic/political system?
Yes, I mean, I think I'm surprised there aren't more. This discussion really isn't around COVID-19 and what it really means for privacy and contact tracing. And the word that every local government is talking about is contact tracing, which means you have to provide a lot of information about yourself and what you're doing and how you've interacted. So I would say governments and corporations, I think, are going to get quite enthusiastic about using databases and software architectures that look and pretty much are blockchain, to exchange information. But there's a lot of changes coming. I mean, I think we're in extremely uncertain times.
It's a question that feels a little bit designed for Roger, to be honest. Roger, I'm sure this stirs up more than a little bit for you.
Yeah, for me, in addition to payments, it's kind of the whole point. The thing that made me so excited about Bitcoin to begin with is that I think each individual should have complete control of their own life and should be allowed to do absolutely anything that's peaceful. It's just insane to me, like the fact that they teach everybody in school from a young age, you put your hand over your heart and say a pledge allegiance. Like that's brainwashing from a super young age. For 12 years now they're talking about free college as well. Like, well, if the government didn't do a good job in the first 12 years of educating you, why do you think they're going to do a good job in the next 4 years? And so it's all just a bunch of nonsense that people have been indoctrinated from a very young age. And I think the whole world would be a lot better off without any of these centralized governance institutions. And the free market can find a way to provide governance services much better than some centralized coercive institution based on violence by a bunch of men with guns, wearing costumes, working in buildings with flags out in front. So that's what I really think. And there you have it.
I think there's a role for government in the world, and it's what's great about democracy is that it acts as a check on the creeping power of government on civil liberties. So I'm not quite as fire and brimstone as Roger is, but it's entertaining and fun to listen to him talk about it, quite honestly. Yeah. I'm sympathetic to Roger's underlying beliefs, but I do think that there's a way to do it in the existing system.
Oh, wow. I just got a note from our organizers here that we are down to 3 blocks remaining, and then we're at the halving, guys.
If we get through this halving and it goes off without a hitch, it's one of the sort of few things in life that you can kind of be certain of. And it's just sort of interesting that certainty is programmed by design into these systems when so much of our lives is so uncertain and beyond our control. So I enjoy it. It's a fun thing, fun moment.
Well, I'm kind of happy to conclude on that note, guys. Thank you for a very engaging hour of conversation about crypto topics. Really appreciate having all you guys here. And I'm happy to play us out on the ukulele, but I won't. Unless. Oh, fine, I will.
Should we do a duet?
Duet, yeah. CFG, baby. That's all there is. All right.
All right. Sorry.
All good, man. All good.
Yeah.
Cheers. Thank you very much.
Thanks a lot. Good to see everybody. Take care. Bye.
Thank you, everyone.
Thank you for joining us for our 3 p.m. Bitcoin halving party live stream panel on venture capital in crypto. Where is the big money going? We have our esteemed guests, MELTEM DEMIRORS, venture capitalist and chief strategy officer at Coinshares, and Matthew Roszak, co-founder of Bloq and founding partner of Tally Capital, a private investment firm. Thank you again for joining us, panelists. I would really appreciate you right now. We are moments away right now. How is everyone feeling about this happening right now?
I have to say before we get started, Matt Roszak and I have known each other, about 5 or 6 years now?
Right.
A while. We got to know each other back in the days when all the people who liked Bitcoin could fit into one room. And they did at the dinner parties Matt used to throw, and still used to throw these great Bitcoin dinners. A lot of fun. And what I was saying to Matt is every major Bitcoin milestone that's happened since I've met Matt, we have celebrated together in various locations around the world. And so it's really amazing that we're getting to celebrate the halving together.
What was your most successful investment that you provided funding for, or that you had provided support and a partnership for?
This one's so easy.
So just,
yeah, I mean, there is an easy answer to it, truly.
Yeah. I mean, my answer is Bitcoin, not just the asset itself, but if we look at the tremendous amount of economic opportunity that's been created thanks to Bitcoin. There are thousands of companies that have gotten built on top of the Bitcoin network. Matt and I both were part of the Scaling Bitcoin event series that happened, a few years ago, that were really about the Bitcoin development community and Bitcoin Core, and bringing together these different stakeholders to focus more on the open source development side of the protocol. But I think Bitcoin is unparalleled in the amount of value it's created for people.
Okay.
Yeah. I mean, I would say the same thing, and maybe also the network of participants. MELTEM and I were relatively early in this space, and so a lot of the technologists, the builders, a lot of them that have kind of exercised things that they learned in the early Bitcoin days are happening now. It's like, might be a podcast I do one day, but the butterfly effects of Bitcoin are profound. And so you think about Vitalik actually wanting to build back in the day Ethereum on top of Bitcoin didn't really happen. And so he developed Ethereum. And so a lot of these things, these inspirations that Bitcoin creates has been pretty profound. So it's kind of a nuanced thing. Bitcoin is probably the best investment I've seen in my career, let alone just in crypto. But also that network in the early days of meeting people like Jesse from Kraken or CZ or Vitalik or some of these folks that have built really big businesses and networks. That piece, and having like a node in all these different heat maps of crypto is important to maintain even today. Managing a network and whether you do that through email, podcast, Twitter, etc., to kind of stay on top of what's happening.
Okay. Now, in the state that we're in right now in the pandemic, are you seeing fewer deals right now?
I think, just like in anything, everything is slowed down. I mean, some people are on Twitter like, oh, VCs are open for business. I think there's a really human dynamic to this where a lot of stuff stops, gets more difficult. There's a lot of friction. And that's just the reality. I mean, that's just the world has slowed down. And I think it also kind of reset people's investment thesis or what's important to them, and kind of cleared out the clutter. I mean, I took a machete to my email, which was kind of helpful and felt good. And
very
really
therapeutic.
Yeah, totally. And it helped me kind of like distill down like what's really important. And on one hand, I like doing lots of different things, investing, building, advocating, all these things. And then on the other hand, I was like, well, what are the 2-3 things I can do that are really going to move the needle? Yeah. And in a way, this really helped me kind of streamline my thinking, harden my thinking, and get a little bit more focused. And it's like sometimes like the focus word is a bad word because you want to do more and not miss something. But it has been helpful to me. That has slowed down investing, no question about it. And it also has created opportunities in terms of M&A, in terms of pricing on deals, and the realities of what happens when capital isn't as abundant as it once was.
Okay. I think we're down to 2 blocks, guys.
If I can just add to Matt's comment, or maybe expand on it. I definitely agree with Matt. I think the other component that's really important here is investor mindset. So we've been operating in the last 11 years in an expansionary market. In fact, it's been the longest period of a quote unquote bull market or an expansionary market in recent history, right? At least in the last 100 years. And what's been so interesting in that is venture capital as an asset class, it's really far out on the risk spectrum, right? So if you look at how people allocate capital, there's really low risk stuff, like a treasury would be historically have been considered very low risk because the US government is a very trustworthy creditor. You have a lot of certainty that you will get paid coupon yield and your principal at the end of the term of that loan. Whereas if you look at venture, right, particularly early stage venture, which is what I'm focused on, and I think Matt is focused on as well, this is really high risk opportunities. And the reason, I think one of the reasons venture has grown so much as an asset class and why we've seen an explosion in venture is because of the fact that the capital was effectively very low cost, right? It's always very important during different cycles of the market to think about the opportunity cost of capital. And the fact of the matter is that, you know, a lot of venture has been financed by really cheap capital. As we look at the way the world is changing, what I think is really exciting for venture and for alternatives like crypto assets generally, if we put crypto assets, you know, in this bucket of investment assets called alternatives, they're not fixed income or debt, they're not equity, right? They're these alternatives in this new kind of emerging asset class. What I think is really interesting is across the spectrum, risk has changed fundamentally and overnight. All of the models we had as investors have like gotten thrown out the window. And for me, I'm a mathematical economist. Like all of the stuff I learned how to do in school basically got thrown out the window.
How are you managing that? That's the real question. How are you managing that now on a day-to-day?
I will say, you know, like being in Bitcoin has actually been really helpful in having to constantly realize that I know nothing, because the more I learn, the less I realize I know. So I think it's been really beneficial for my intellectual humility, but also my willingness to sort of learn and adapt. So I'll say like thanks to Bitcoin for giving me a lot of mental resilience, but also self-awareness. Matt probably watched me learn some of my early lessons in Bitcoin in a very public way where I like got punched in the face intellectually. And I was like, okay.
Tell me about, you know what? Tell me about that moment when the two of you basically, when he kind of looked at you like, oh, let's have that conversation on the side real quick about that statement.
I think to this day we still look at each. I think to this day we still look at each other because there's a lot more to learn, and we're still early in this Bitcoin journey and this whole crypto blockchain journey broadly defined. So I think, you know, that intellectual humility, being an expert or anything about Bitcoin is total nonsense. I think we're all learning about it. Again, those butterfly effects and those ripple effects of what this does to banks and countries and privacy and like all these things are pretty profound and almost jaw-dropping in terms of the effects.
Okay, I have I have actually two questions for you, Matt, from the audience. First, Matthew, you've been on the 2002, wow, all right, 2018 Forbes richest people in crypto list with a net worth of almost $1 billion. 2 years after, do you think that you would have ever been on that list? And what % of your portfolio is in crypto, if you care to divulge that information?
Well, I think those lists are kind of silly. On one hand, I'd rather be on a list to do good in the world and make a dent in the universe in that way. And so I think, and on one hand, you know, when people reach like a business success of any sort, you have resources to do stuff. And then how you translate those resources to doing good things is I think a much better measure. And so on one hand, you ain't seen nothing yet. In terms of the impact I want to make on the world. On the other hand, I'm still very concentrated in crypto. I can't find a better, on one hand, to spend my time, energy on a particular industry or building something. On the other hand, and you know, pretty far down the rabbit hole, still believe that Bitcoin and certain other cryptocurrencies present an unprecedented ability to create value. So still focused on building and advocating for this technology. We have a long way to go. You know, we're at the third halving here, measured in minutes. And I feel like we're just getting started. We're cheering, you know, a 30-year hedge fund veteran talking about getting a micro position in Bitcoin. And it just shows you where we are. You know, we're kind of a decade-ish into this, and we got a lot more work to do.
Well, ladies and gents,
we halved.
We have halved. Woo! It is that time, party people. Guess what I've got? I got a little list right here for you. if you guys had no product endorsement right there, but it is the time. If I had music, I would, do anything, but I'm old school.
Bitcoin.
It's the have.
That is what I got. My
It's
little
the have.
Bitcoin.
I really appreciate
amazing.
you guys. You work for Coinshares. Where's the institutional money? Will we see the influx of money in 2020 from big investors?
Yeah, I think in 2018 the narrative was the herd is coming, and I think what we saw is there wasn't really a herd. It was really drips and drabs, and this goes back to Matt's point that he made earlier, where people kind of go through this life cycle. And our team at Coinshares actually has done a great job mapping it out. It's like people become aware of Bitcoin. Then they're like, there's something to this Bitcoin thing. Then they learn about it and they get to a point where they say, okay, maybe this is something I want to allocate to. Then they have to learn how to do it and what their options are, right? And maybe they start off with something like an exchange, or maybe they start off with an OTC desk or structured product, and then they evolve all the way to custodying their own coin or having their own setup. So there's sort of this cycle they go through. So I don't think there is this one seminal moment you're going to feel. I don't think there is this like one point in time you're going to say, oh, the institutions are here. I think it's going to continue to happen. It's going to be slower than people believe, because again, change is really hard. Sitting down with an investment committee of people who are, 50, 60, 70 years old, who are the fiduciaries, who are the decision makers at these large endowments, these large funds, it takes time, and it's not going to happen overnight, and it starts slow. So I don't think there's going to be like one sort of big bang moment where all of a sudden there's all of this money rushing in. I think the pace we've had over the last 4 years has been phenomenal. And I think that pace will maybe have periods of acceleration, periods of moving a little more slowly, periods of correction. But I think, separating the cyclicality of Bitcoin, meaning some of those ups and downs, from the secular trend, which is sort of the 10-year trend we've been tracking, which is going from 10 cents to $10,000. That is a great trend. And I have every degree of confidence that trend will continue.
I would like to know, guys, how you use crypto on a day-to-day basis. Like, how do you use cryptocurrency? Do you use them apart from hodling it? So first, I would like to know the opinion of Joel.
I don't spend a lot of crypto on a day-to-day basis. I do have some loaded up on a crypto.com MCO card. But, I feel like while the dollar still has value, it makes more sense to spend the dollars and hodl the Bitcoin.
Can I offer a counterpoint to that, Joel, and see if I can convince you otherwise?
Well, you're gonna talk to me about adoption.
Well, I'm going to try. I mean, I completely understand. And whenever I have a chance, I'm always, my biggest urge is just to get rid of my fiat, right? Because you look at the trillions of dollars that are being printed, and we know that that's going to set the value of our money right down, and Bitcoin's going to be worth more. And so it's like, obviously the instinct is to get rid of your fiat and keep the crypto. But there are so many easy ways to purchase crypto. And as long as we're using our credit card, as long as we're using our bank account, we're feeding the system that we're trying to overthrow. And we're feeding the system that we don't like because it's centralized, it's tracking our payments, and it's freezing accounts, and it's controlling our decisions. So I would offer to anyone who wants to be, part of this system and really walk the walk, to spend your crypto, support the merchants that are accepting crypto, but then just replace it. Just buy new ones. Places like Shapeshift, for example, have 0 fees on their platform. Right? You have to go through the KYC. There are obviously no KYC alternatives like SideShift, but there are 0 fees on Shapeshift if that's what you're worried about, the money going in and out. So just replace the crypto, support the merchants, then replace it. I think it's important that we just start to opt out of the system and just vote with our feet.
I usually when I work with crypto stuff, like for example, I needed some artwork done for my, website and stuff, and I pay those guys in crypto and things like that. So, I mean, I always find people that will accept cryptocurrencies for transactions. Obviously it's hard, but for me personally, I know that the whole idea is for like adoption to spend it, but I really do think it's like Gersham's law, bad money drives out good money. And I always use this example, if I had to go buy groceries right now and I had a choice between spending $100 of Bitcoin or a paper $100 bill, which is being printed out endlessly, if I know that the grocery store will accept either, I will choose to give them the paper because inherently I believe in the value of the Bitcoin more. So it's kind of like a catch-22. People say, oh, you need to spend Bitcoin. But when you understand the value of Bitcoin, you kind of don't want to spend it. You know what I mean? So that's sort of like the biggest sort of like fallacy of it all is like, what do I do to increase adoption when I know how hard this asset is?
So I actually get paid in crypto. And it's a nightmare. So I don't like it. And I think, you're talking about mass adoption earlier. I think that's one of the biggest issues that we're facing, because I don't want to spend my Bitcoin because, number one, I'd rather invest, I'd rather hodl. I would also find, like transaction fees are a nightmare. So for me, my biggest issue is user experience. And I think that's one of the biggest things that we're going to face when it comes to mass adoption. Somebody like me already in the space, I'm having such a nightmare when it comes to converting it back to fiat. You need to do that right now because people have bills to pay that don't necessarily accept crypto. So as much as we say, well, get rid of all your fiat, well, I need it. And I think most people need it. So I think one of the biggest problems is that user experience. Because if I'm struggling.
Where are you located at, Leia?
I'm in London at the moment, but I hope to leave.
I had some other friends in the UK. Yeah, they've had a hard time trying to spend it. And it's like, for me, I like to get paid in crypto. I don't want to get paid in bank wire.
Why?
Bank wire is going to
take do you like
forever.
It?
Well, because we have a lot of options to turn it to, like with Coinbase, we can easily turn it to fiat to get it within a day, deposit it into our bank account. And if you use the
but you pay so much, but you lose so much.
Convert it and spend it. Yeah,
but you lose so much in your transaction fees. It's so unnecessary. It's like your hard-earned money.
Not on some, you don't. No, not on crypto.com. No, you don't.
I have to ask you about that because I have a card coming. What are the fees? I still need to work this out. What are the transaction fees? Because my card is arriving soon. And fingers crossed, I'm hoping the fees aren't a nightmare.
I don't think the fees are a nightmare. What do you think, Joel? I mean, I think that if you want to convert it from so you can actually have 100 different cryptos and convert those over to whatever, sell it, and then top up your card. And so you actually have multiple accounts. You have a wallet, and then you have a card. And so that's one of the things that I use all the time that makes using crypto easy finally.
I would like to chime in on the adoption talk with cryptocurrency. I spend crypto exclusively, through the crypto.com card, but I have a lot of freelancers that work for me from other countries for other business stuff I have. And I pay a lot of those in Bitcoin. And then I spend my crypto.com card. Every bill that I pay outside of a couple that require a bank account, I pay with crypto.com. But with crypto.com, we're really not.
BitBoy. I love it.
Yeah, but I'm glad you said that, Naomi, because I'm about to get on you here for a second. So,
guys, I would use the card, but out of the 50
so here's
states,
the thing.
They only don't have New York for crypto.com. They do all 49 out of the 50 states, but not New York. Right. So I would.
Oh, wow.
Me.
New York when it comes to crypto, I don't know why that is.
Because New York is a living
New York
social
is terrible.
hellhole. I mean, it's like the epitome of this Orwellian, disgusting nanny state that drove all
this all lines up perfectly.
In 2014,
I'm surprised they don't make me have a bit
license
license to run my channel. So
the thing is I spend crypto exclusively. I spend it every day. Okay, but I'm not, when I'm using my crypto.com card, I'm not really per se spending crypto. We can talk about it. We're spending crypto, but you're converting it over to USD before the transaction. You have to top it up. I keep a pretty good amount. So I move Bitcoin over and I spend until it's out and then I use it. But I think what Naomi's problem here with what a lot of other people are saying is really represents, I think, a big shift that has happened in crypto, which is Naomi's old school. Naomi is like, this is decentralization. This is all about fighting, for justice, for us all to be able to get rid of the banks and fight fiat and get rid of fiat and all that. And she represents what is now becoming a smaller and smaller percentage of the entire crypto space. So that's why when some people say things that, sound to be counter to arguments that Naomi's making, like, Naomi gets kind of, or Natalie, I'm sorry, Natalie, sorry.
Stop calling me Natalie.
But Naomi gets a little offensive.
On of his, he called me Natalie. It was terrible.
In the book Bitcoin Billionaires by Ben Mesrick, who he's been writing billions this year, which has been great. But in Bitcoin Billionaires, there's a part where the Winklevoss twins are talking to Charlie Shrem, and basically what they're telling him is, in the beginning, Bitcoin needed people like Roger Ver. They needed people like Eric Voorhees that were very passionate about being libertarians and pushing this whole narrative, which is a good narrative. I mean, I think we're, on some level, if you're in crypto, like, you have to have a little bit of that in you, right? But over time, what we're seeing is a fundamental shift where it is moving towards institutional. Is this what Bitcoin was really meant for in the beginning? No, but it's really it's transforming and it's turning into something, totally different than what it was meant. So what they say in the book is in the beginning, they needed those people. They needed the libertarians. They needed that movement to push it forwards. However, now kind of training wheels have taken off and it's taken its own form. So Naomi, I'm with you. I would love it if we could replace banks. I love the decentralization aspect of cryptocurrency. I'm just not sure if Bitcoin is going to end up, being the digital cash that we all want it to be, which is why I think that it will definitely be something else. Bitcoin to me is gold. Other cryptocurrencies are more like, a digital currency per se.
Actually, that's interesting. That's an interesting
Giovanni,
point.
can I mention
This is a debate. This is a presidential debate. Naomi needs her 30-second rebuttal.
Well, I would just say that Bitcoin became popularized exactly the same economic climate we're currently experiencing. Oh, we had giant corporate bailouts. We had so much money being printed. We had it being injected straight into the pockets of all the cronies, all of the friends of the politicians, and people were so angry. It is no coincidence that Bitcoin, which was released at this time, suddenly had this groundswell movement around it. It's because people were so angry about what was happening at the time. It was perfect timing for Bitcoin. Now, right now, as you said, Bitcoin, you're absolutely right. The demographic of Bitcoin has shifted over the time. The demographic of crypto in general has shifted. We're getting more institutional players. We're getting more, fringe movements coming in. And now those original people who were so passionate are the fringe movement. And people who are coming in now can't understand why people were so passionate about a currency. They're like, it's just another currency, guys. Like, I'll use it if I can make money off it, but it's just another currency. But what I think we're going to see, and this is my prediction, I think this current economic climate is going to create a resurgence of that same passion that drove and popularized Bitcoin in the first place, because we're not in for a good ride in this next few years. The economy is in really bad shape. Governments are making really bad decisions, and I do not know how they're going to get out of this debt hole that they are building for themselves. I don't know how these millions of people that are unemployed, filing for unemployment every single week, are going to be handling this situation. But people are angry. They're looking for alternatives. They're looking to opt out of the banking system that is charging them exorbitant fees and hoodwinking them and destroying their savings. They want out of the system, and I honestly think that we're going to see a resurgence in crypto.
I agree with her, by the way.
I think that Aaron and Austin wanted to say something.
Yeah, I just wanted to chime in real quick. If we need to move on, that's fine. But what I wanted to say was that it seems like the narrative when Bitcoin fees were cheap was that the Roger Ver fast, reliable, cheap payments. But it seems like the narrative moving into this next bull run, especially with what Paul Tudor Jones just said, is the digital gold, and that's a lot easier. When people got into Bitcoin in 2016, 2017 as this new money like Venmo, there was like this tension point of that. Well, Venmo is actually a lot easier, but the digital gold narrative is less tension. And I kind of feel like, yes, I'm excited about things like the Lightning Network, but I don't even think we need that in this next bull run for people to realize that Bitcoin's true value is censorship resistant, undebasable money. So I was like, for Naomi, like the fact that Bitcoin's primary value is that it is censorship resistant, undebasable. I agree, spend and replace, but I don't think we need that necessarily for people to buy into Bitcoin.
Cointelegraph. Like, subscribe, and hodl.